Hello traders, it's 8:03 a.m. Chicago time on the 27th of March 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, just looking at the overall picture, really there's not much to talk about here in terms of changes overnight. There's a slight allocation to risk this morning. The market's continuing, the indices are continuing from the pop higher into the close yesterday, with the Euro stocks leading the pack up 59 basis points. DAX is up 40 basis points. The Bund is up 35 ticks, and the Nasdaq's up 12.25 points or 17 basis points. And the Euro FX is off. That's the laggard today, along with gold. Gold's only off $1.30, trading at $1,313.70. The bonds are up a tick, and the 10 years are up 4.5 ticks. So overall, really not much to look at here or talk about in terms of the overnight session. There's not much news either to be factored in. Overall, it's really a quiet overnight. The summary of the overnight session from Reuters is the U.S. stock futures edged lower as fears of an upcoming U.S. recession continue to weigh on investor sentiment. Major European indices are trading in the red on global growth fears and uncertainty over Brexit. But I feel like all of that has been changed since this was released at 6:39 Central this morning. So let's take a look at what we expected yesterday versus what we got. And of course, just looking at the calendar, we did get this morning, one second, we did get the trade balance number at 7:30 Central, expected 57 billion. Got deficit, got 51.1 billion. The prior's 59. There's nothing else really on the calendar. We do have the current account for Q4. We have EIA gasoline inventories also today, and then we have the parliamentary vote on Brexit alternatives that occurs at 3 p.m. Eastern. And then this evening at about 7 Eastern, we get Fed's George. And then there are ongoing trade talks between China and the U.S. So that's where we stand. Yesterday, we're opening in a gap up on what looked like a reversal. We had a neutral day the day before on Monday on balance. And the primary scenario is likely open auction that attempts push lower. And then I was looking for a push into 30 and then ultimately a push into 35 right up in here. So the key areas to talk about for yesterday, 30 and 35. Expected the gap to remain. The secondaries, we would likely move towards the prior day's high, bounce up, fall through, and push into value high in the into the 18 area or so, 28-18 area or so for a bounce. Guess which one we got? Which of the scenarios we got? And if you said both, you are correct. Here's, let's look at it on the Renko. Pretty unusual. Both scenarios hit their levels very closely within a couple ticks. This is the first push. We saw a bit of a, we did not see an open auction on the open. And so we have to back off in that situation. We have an open drive, and we would have to back off the first stock zone that we run into, which is the 29.75 area, the 30 area. You can see that the market made a quick push into it. 29.50. These stock zones represent the current stock zones, not yesterday. They've been adjusted. But you can see 29.50 against 29.75 for a small rotation down up to 32.75. consolidating above the mid, and with the IB having been complete, it pushes finally to 35, right? So we talked about this in this chart here. We're looking for 35 on the high right there. And so we push to 35, and then we start to see rotations starting to expand to the downside. So we have pretty good rotation expansion to the upside, takes out the IB, rotates down, and we see range expansion to the downside, or a rotation expansion to the downside with smaller pullbacks. So now things are starting to favor the downside once the market had made that high. What do we do from here? We go right for scenario 2. It's almost like the market reopened right here, right there. This would be the reopen compared to the scenario, and then started to push lower as we would have expected on scenario 2. And where does it bounce off of? It bounced off of the prior day's high to the tick, and then in that situation we would look for it back into the IB low, into the open, and then continuation down to value high, right? That's the plan for scenario 2, down into this value high area, into the, what is it, the 7-ish, 7, 8 area. I think it's the 8 area. And so here's how it played out. It went right to the IB high, IB low, almost to the tick, to the IB low after going to the prior day's high to the tick, and then we start to breach into Monday's range, and there it goes down into Monday's range, and here we're looking for 2808 on the test, and we get 2808.50 right there. Okay, so this is an example. I guess it's almost handpicked textbook example of why having scenarios makes a huge difference. Once the market starts behaving in a way that matches a scenario, we start to look for those areas and are prepared for targets and scale outs and so on, and being able to manage the trade. Now, overall, when we look at yesterday, really there was no consensus on price. The point of control shifted from the top to the middle here, and we closed right on top of the day's point of control, which is right in the VWAP, and right in the VWAP open mid area. Okay, so it really didn't stay in on one side or the other. Did not show bias. The market did test the prior range very, very well. We went basically to value high right here on a balanced day. We did not touch the close at 7.25. We stopped well ahead of it, about 5 ticks, and then bounce back up. So in the overnight, we expect this to chop around, bounce, but we expect a higher high to the close in the overnight, given the way it closed with an impulse up. We expect that to continue. Time interrupted that. The close interrupted that. So we expect the market to float a little bit on the reopen. So let's take a look at what that looked like. Here's the reopen, pulls back, and then starts to drift up into the overnight high, 31.75. And then it just starts to sell off right in the European Open, right in here. It starts to sell off, and we're holding basically in the same spot. We're on top of yesterday's close. The overnight point of control is here. It shifted back up and went to 20, and then it shifted back up to 28.24 just now. VWAP's right there. The overnight open is that, like, there's just a lot going on here. Pretty good volume overnight, 236,000 contracts. It's pretty decent volume. But the market has tested up, tested down. The low test is not very strong. We don't see an excess there, even though the European markets are open, and then we're back in the middle. So there's not much to glean off the overnight session except to say that, hey, there was a fair amount of activity. The overnight inventory is even. It's not long, it's not short, it's even, not only in price in that we're trading yesterday's close currently, but also in delta. Delta's trading at plus 12 or minus 12 or something like that. It's basically zero. So the auction overnight, the story that the auction overnight's saying is, um, hey, look, man, we tried to go up, and then we found sellers, and then we crossed the close of yesterday, and we tried to go down, and we found buyers, and we're good in the middle. We're agreeing that the middle is where we need to be, given all the inputs, political, macroeconomic, and all that stuff. We want to be in the middle here. So that's the review portion. As I said, there's not much on the calendar today that is likely to push us around. So I'm expecting a relatively calm day. I'm expecting that we are likely to balance. One thing to note is that when we look at the overall action here, let's take, so we filled the gap, so we got to move this back. I was doing some research and I reset it, but if we look at the action here, let's move this back to the last low because we filled in the gap. So we're looking at what have we done since the last low, and then now we move it forward to build a profile for what's happened since. And that's what we've got. So let's bring this back up. And you could see here just above is the MC point of control for this region at 2830 for 2830, and we're basically holding steady in balance in a larger balance. I mean, there's quite a bit that's happened here, right in here. There's quite a bit that happened, and the balance of all of that is 2830 currently. 3175 is the overnight session. So what does that mean? What does that mean? Why do you care about that? So overall, where's my 1 sigma and 2 sigma? So there's 2 sigma up, 2 sigma down. Okay, let's keep it this way. So coming into today, here we are on top of yesterday's close, and point of control, expecting again, since we are imbalanced and we had an overnight session that basically bounced back out in the middle. Now we are likely to look for an open. I'm looking for sellers to step in here, push it down into this 28, 16, 17 area for an impulse up, consolidate, and then look for the overnight high to be taken out, and then for it to just sit around and potentially push this 35 by a bit before resting. I expect the range to remain, well, yesterday's range was 27 points or so, 26 and a half points, pretty decent. But we also opened out of range, right? So when we open out of range, we generally get more participation. And so overall, we're opening in range inside of what yesterday ended up being, which is just a balancing act. And I expect that we are likely to continue. Why am I putting scenario one as a higher high, higher low? It's because the one time framing down, which we see here, lower high, lower high, lower high, was negated yesterday, and now we have a higher high, higher low. So now I'm looking for one time framing in the opposite direction on the day time frame. We're one time framing up on the weekly. So the day and the weekly are in congruence there. They're working with each other, and I expect that to continue. Not seeing a reason for this to kind of turn around. And so that's where we get the primary scenario. The secondary scenario is an open auction that drifts up into the overnight high, pushes into this 35, pokes through, falls back in, gets stuck at the 30 again, the MC point of control, and then starts to explore downwards towards yesterday's low and last week's close. So this is a divergent idea from scenario one. Why? Because yesterday we tested up, we tested down, we finished in the middle. The next thing, the next thing is likely to explore one extreme or the other, and that's what I'm looking for here. I'm looking for it to test one side or the other. It is Wednesday. There's no NFB, FOMC. There's no PMI. There's nothing here that is likely to keep the market waiting. Keep your eye on the yield curve. Yesterday, I talked about the yield curve at the very end. I know a bunch of you had already left, but I would urge you to go to this website here. Let me post it in the browser, and I'll put it in the chat. Here it is in your chat in front of you. I urge you to go to this site and take a look at this and watch. So I'm going to set a tail on here and watch how this yield curve is moving in time. So 2015, 2016, why do I care? In fact, I'm doing a follow-up with Ira Harris because this is his stomping around the yield curve and money flows. I'm going to do a follow-up to say ask why is the market nervous about this yield curve inversion, which is what came into effect on FOMC day, and the market's really nervous about the fact that the yield curve is inverting. Watch this end. This is the front end of the yield curve. This is a normal yield curve when it's shaped like this. There's a higher risk premium on a longer dated a treasury note. You want more money if they're going to keep your money for longer. So you'd expect to get paid more, and that's what's normal. But as we approach today, so here's September 2018, October 2018, and so on. And as I move this forward, you can see that the yield curve is flattening. So there's it starting to kind of flatten on the short end. The 2, 3, 5 years, the 3-month, 2-year, 5-year are starting to flatten, and then you could see that the overall the yield curve is starting to get a higher short-term rate than an intermediate term rate, the 5-year, and so on. And that's really important for banks and so on to keep an eye on. Generally, when this happens, it takes on a longer end, it takes 7-9 months or so for the market to start feeling the pain of these higher interest rates, and it's negative towards stock prices. This is why it's important to pay attention to. So I'll do a video with Ira where he kind of tells us why this matters. I'm not an expert on the subject, so I'm speaking out of turn, and hopefully that'll help you discover that watching that yield curve is actually pretty important. Good luck today, and I'll catch you tomorrow. Hopefully you gain something from today's Trader Bite. Take care.